Tengler, CEO of Laffer Tengler Investments. Nancy, always great to see you. And for more inflation-busting stocks, we'll refer to that a little bit later. What is our first stock here? I think our first stock is supposed to be Coterra Energy.
Yeah, Tyler. So we still think that, and it's good to see you. And thanks for having me on a day when the market's
You're welcome. We're always glad to have you on.
So we still like the energy trade. At the margin, we've been shifting our focus away from the upstream names. We still own some, but we're really interested in the downstream and midstream. So this is a company that is a diversified energy company, trading at 8 times, yield of 8.7, and a 5-year dividend growth of 70% because they're obviously paying special dividends. What I really like about it is they get 100% of their revenues in the U.S. So your screens identified some great names, and this is one that I would be buying.
All righty. Shall we move on to the next stock, which would be ExxonMobil? There's a theme going here, Nancy.
Same reason, 3.6% yield, much slower dividend growth, but 78 or 76% of the revenues are in the downstream part of the business of the oil market, and we think that's probably where you want to spend the next year or two in this trade because it is a cyclical trade.
So Nancy, I want to skip ahead to one of your fourth pick, I guess, on this list, Cal-Maine Foods. They're a big-time egg producer. So my question for you is, have we hit peak egg prices? I know a lot of times people are going to the supermarket. Eggs have doubled in price over the last year. So how is this stock inflation-proof? Because it's hard to believe people will pay even more for eggs.
Well, you're right, Frank, but I do think it has been inflation-proof. And so my response on this stock is it's up almost 60% year to date. It does have a robust dividend policy, and that's very important to us. I've been running dividend growth strategies since the mid-1980s. This is exactly the time when you want to own these kinds of stocks, but this one's pricey, and it's kind of at peak earnings. So that could equate to peak egg prices. So I think if you own it, you hang on for a little bit longer, but if you don't own it, I wouldn't chase it here.
You might have egg on your, face if you did. Let's talk about the market more broadly here. What are your impressions of this rally? Is there a reason for it, or is it algorithmic trading, which is what I suspect?
I think so, Tyler. I mean, I was sitting at my desk at my home office this morning with my head in my hands when the futures were down yet another 500 points. This feels like just a knee-jerk bounce. It is probably algo driven, but I will say that I think earnings are surprising many investors. Though I don't think the market's trading on earnings until we get clarity on inflation and a Fed that at least seems like they're going to listen to financial markets and or listen to the financial conditions tightening. I think we're going to continue to see this kind of volatility.
So Nancy, one other question. These stocks are on your list, but when we look at grocery stocks and names like Walmart, Amazon, certainly not recession-proof, but are these stocks that you would ride out during the recession because they sell a lot of essentials?
Absolutely. Walmart's in our 12 best ideas portfolio. We also own a big chunk of Target in our equity income strategy. These are the 2 best retailers, I think, in the world, and they're going to be drawing down inventories and back in shape by Christmas.
Nancy, thanks very much.